All right, we should be live. Thank you everyone for joining the live stream. Really the purpose of this is to answer the questions that you might have for Gold Road's management and of course the local experts on site. So gentlemen, thank you so much for joining us. Perhaps we can start off with you, Jeremy, to really give a short overview of what Gold Road's all about and where you're currently standing from your perspective.
Yeah, thank you, Stein. Thanks everyone for joining. We're very, very excited about Gold Road. This is our fourth gold company and we think it might just be the best decision we've ever made. The timing could not be better. Turning this beautiful mill back on, aiming for first gold pour in September, and super tight share structure. We'd like to pay a very big dividend if Jim and the team deliver, and I think they will deliver. It's a very exciting geology, a state-of-the-art mill in the beautiful state of Arizona. And just to put it in perspective, if you tried to build a mill like this today and an operation like this would cost you at least $100 million US. It would take years and years of permitting. And our pre-money valuation for this seed round is only 3 million Canadian. So tremendous interest for this seed round. The word's got out that Jim and the team are back and are restarting production as we speak. But I'd like to hand it over to our general manager, Jim Cooley. Kelly and Raj and hopefully Alex has just arrived. They're the star of the show, and I'll let Jim introduce yourself and tell the team your plans.
Okay, my name is Jim Cooley. Of course, I've been at Gold Road several years, since about 2010, and also back in the 90s when the plant was first built. But we're planning on getting the plant ready, put back together, some new liners put in the mills, going through the dry stack system, the crushers, going pretty much step by step through all the bearings and motors to make sure everything's going to be sustainable for a long period of time. And we are just in the stages of getting the first new hires in and getting people really started. So it's a great opportunity, and we're looking forward to getting this into production in the next 3 months.
So my name is Raj.
Thanks for that. Oh, sorry. Please go ahead.
I was going to say, my name is Raj Naildin. I'm the technical services manager. Currently, as Jim said, we are getting the mill up and going with new hires and all the items and capex we are trying to get on site. On the haulage and the mining, right now we're working with the board of director and the CEO and Jim as well on getting a strategy together where everyone agreement on production from underground and surface haulage. So currently that's one of the key items we are trying to solve this week. So pretty busy right now with a lot of moving parts. Alex, you want?
Hi, my name is Alex. I work underground and taking care of safety right now, helping the new hires and making everything work nice and safe.
And finally, we got Kelly.
Kelly, my name is Kelly Hartley. I guess I'm kind of over maintenance and the operations of the mill area and everything. And finally got some guys started today. They're down there kind of cleaning up. We've had some rains and the place is kind of a mess, but we're going to get everything cleaned up here in the next few hours and then start our repairs. We got quite a bit of stuff to do. But I feel pretty confident we'll have everything ready by our start date, and everything should be up to par and ready to go, hopefully September 1st. I don't see a problem with it, really. We should be able to make it.
Great. Thank you so much, gentlemen, for that overview there. I really appreciate that. For everyone watching, please feel free to ask your questions in the live chat. That's why we're here. We're trying to answer your questions, the local experts, and of course also Jeremy, the CEO of Gold Road. First question that we have from Dave, I suppose for you, Jeremy. What is your stock trading symbol, or what will it be? So perhaps you can quickly outline your go public strategy.
Yes, it's a good question, Dave. We're not listed yet. We have our eye on a shell on the CSE. We also have a good friend of ours in New York who'd like us to list on the New York, on the NASDAQ. So we want to list this at the end of this year. First, we'll let Jim and the team produce and get some good numbers on the board, but it's certainly a great time to list. And if you think about the potential of where this could go, let's say we only have 14 million shares out after we complete this round and hopefully don't need to raise again. You know, and we're doing that at just 50 Canadian cents. So there's no reason this can't be a $5 stock if we deliver the numbers that the boys are hoping to deliver. So super tight structure, and yeah, probably just we've got very lucky on the acquisition. It's a fantastic timing for such an acquisition with the market so strong. Very rich in silver also, so it's a silver play as well as a gold play. So yes, we want to list, but we don't exactly have a ticket just yet.
Great, thank you, Jeremy. Next questions are already coming in, so that's great. Keep them going. Corey Spoler asked, have you made a decision on getting a geologist out to get a better idea of what you're working with? I suppose first to Jim, Raj, and the team over there, and then perhaps Jeremy afterwards.
I think both Raj and I, we do have contacted a couple of them, and we're just kind of vetting their resumes and deciding on who would be appropriate for this epithermal vein. Is that correct, Raj?
Yes, agreed. So we have contacted a few geologists, and we are right now just vetting which one would be ideal for our site. And so we should have a geologist lined up hopefully by end of this month, but mostly sooner.
And perhaps, gentlemen, we can also quickly explain what the importance of having a geologist on this project. Of course, we've done a site visit video recently, a documentary of 30 minutes explaining really what this project is about. But perhaps you can quickly recap about why getting a geologist in at this stage is so important.
So like with any mining, you have the resource, right? So the resource has to be in high classification to de-risk your mining. So you do what you say and say what you do kind of thing. So right now with the epithermal deposit, we have identified multiple vein structures. And so the strategy is people think mining is like a factory. You press a button and all of a sudden you have gold in the end. That's not how it works. You have to first get a resource and de-risk the resource because you're spending X amount of capital trying to extract that gold or that rock ore. And you have to make sure that what materials you're coming, you want to have confidence that it's carrying X amount of grams per ton. And if you do not have
I believe we lost the Gold Road mine team there for a second. I suppose they're on Starlink. Connectivity might not always be.
Oh, back.
Oh, you're back, gentlemen.
Did you guys hear? So that was one of the main critical items is to make sure to de-risk your resource. You need a geologist to make sure that you are 80%, 90% sure that whatever grams per ton is there on the ground, it's there. So that's one of the critical things is to de-risk your production profile.
And we do have several different vein structures in our mine, and that's where we could really expand this mine because we could have a whole nother gold road just within 100 feet of us. And so we do have a geologist working to explain to us where our best targets are going to be. And that's what we need to do also.
So just ranking your production profile, where there is more bang for the buck. So you're going to make more gold in this zone compared to that zone. So that's one of the reasons why you're saying the critical for geologists is to de-risk your mining strategy.
Perfect. All right, gentlemen. Next question already coming up from Harry Joe. First, sorry, forgot. Special regards to Arne and the Battery Commodity team. Thanks for swinging by as well. But the question from Harry Joe, what are the operational risks and what could you do better than the previous owners? Perhaps you could give an overview of that.
Well, we can definitely keep our costs down underground much better than before. That's one of the major things is picking the right contractor, or even if we're mining it ourselves, to really pay attention to our costs. One of the risks, of course, is the gold price. But with these gold prices, it should be a win-win. One of the other major things is we do have mill feed with the Tom Reed tills and the United Eastern tailings. We will have continuous mill feed that we didn't have with the previous owners. So that will pay all of our labor costs and our power costs And so really that's the main thing we have going for us with keeping production going and then supplementing it with the underground mine ore.
One of the other risks which Jim mentioned is always geology, right? So geology is always one of the major risks. So, and we have a strategy and contingency plan, as we were talking about previously, on getting a geologist on site to de-risk our resource. So that way we can know what we are mining and where the good ore is underground. So with any mining, that's always the risky factor, is the geological resource, right? You can never be 100% sure. And so we do have a strategy within Gold Road on de-risking that, and that's where the geology comes in. And for mining and operational wise, underground, again, we are right now in talks with a few contractors on the production side of it. And just like anywhere in the world, logistics and manpower becomes one of the issues, but we also have a strategy on trying to partner with an experienced contract company who can produce what we say we need to do.
Stein, maybe just one thing to add to the teams. I mean, obviously we've inherited a mine with a lot of drilling data already. Aura Minerals, Para Resources invested millions into drilling this beautiful ore body, and also our other ore bodies. And Raj can probably explain about that later, but we have a lot of data already, and that's the beauty of buying a big mine like this that's already was in production up until November of 21, that you inherit a lot of other people's hard work and experience.
Great, gentlemen. Thanks for that overview. And talking about that rich history, we have a question actually from, what was the name exactly? Jim Pennell. He's asking, or I suppose it's a him, can you give us some history on the project? I suppose Raj, Jim, Alex, and Kelly, if I remember your name correctly, will be able to give that.
So the Gold Road was mined from 1902 to about 1942, when the Mine Act shut the gold mine down because they more or less had to go to mining lead and copper, zinc for the Mine Act. And in 1988 or 89, they came in and started drilling with Adwest Minerals and drilling the Gold Road zones out again. And they hit some really good gold, and they had Redpath come in by about 1990 or 91, develop an underground mine through a decline system. And we operated from 94 through about 99. Gold prices went down to $260 an ounce. And at that point, just the cost of gold got so low that we shut down. In 2010, Mojave Desert Minerals opened the mine up, and we had good years for 2010, 11, 12, and 13. And there again, we didn't have our resource in front of us. And so in about 2014, the price of gold was struggling. We were struggling to keep 500 tons a day coming to the mill because we were getting deeper in the deposit. And we didn't have any geophysics to go on, and we didn't have the geology to go on that we have today. So that was a key point for that period of time until Para Resources and then Aura Minerals, Aura came in. They really did a lot of drilling and a lot of work for us, and things were going well, and they are operating mines in Brazil, and they decided that they just needed to consolidate and put their money in Brazil rather than the US, I believe. But I don't know, Raj may have other things to comment on that.
Well, and what Jim said is true, because the Aura Minerals was a mid-tier company and they wanted a higher production profile. And so currently, with our capacity at the mill, we can maximize our ounce production to be around 20,000 ounces per year. And so in the portfolio for Aura, we were not a high production mine. And so, and Jeremy said this a few times, For Jeremy, this is a perfect mine because with how cost-wise and cost per revenue flow. The other history point, and Jim hasn't pointed out, Charlie Williams, who was a previous geologist and owner of, I believe, Mojave, right? Was it Mojave?
Yeah, Mojave.
So Charlie Williams is interesting because Charlie Williams is a geologist who found gold strike for Barrick Gold back in 1980s, I believe, right?
Right.
So
Yeah.
he actually is one of the key geologists on Gold Road, and he believed in Gold Road production. So someone who has a background with finding rhodium and nickel mining in Carlin Trend, he was also involved with Gold Road. So that's just the trivia on the history of Gold Road here a little bit.
And it's also worth mentioning, Stein, that Aurum Minerals actually had a very good production year, didn't they, Jim? They were just hitting straps. They were getting some great grade down at the 900 level. And I think
Correct.
they decided one night just shut up and leave. And, you know, I think if they'd stuck around, it would now be an incredibly successful mine for Aurum Minerals. Would that be fair to say, Jim?
That would be fair to say. I mean, we were really doing well. We had 2 rigs going on the true vein. We had a couple underground rigs going. We were hitting some really good hits. It's just, you know, things fell apart there, and we produced 20,000 ounces in that 10 months in 2021. So, you know, I think it just comes down to their strategy. Like Raj said, I don't know that we were a big enough production profile for them, or you know what happened at the top levels that it fell apart.
All right, thank you, gentlemen, and thanks for everyone for keeping the questions going. Very great to have this discussion with everyone. A more technical question from Ariel David: moving the tailings from the dry tailings storage to the sale plant, will there be an additional road required, or can you use an existing road?
We are going to start out with smaller trucks and take the existing highway, Route 66, about 2 miles to the Tom Reed and the United Eastern Tailings. I talked to a contractor this morning about hauling that material. Our long-term plan would be to put a haul road around Oatman and keep the whole thing off from the highway. And that way you could use bigger trucks. We have a couple areas that go through BLM land that aren't on private mining claims. And so we are working with our lady at ADQ and with the BLM to see what it'll take to get permits to do that. And I've actually talked to a contractor about putting that road in. I don't have solid numbers on that, but for the immediate startup, we are planning on just using the existing highway.
Isn't that amazing, Stein? The video you got there is tailings that are nearly 100 years old. Just amazing, isn't it? There's a lot of gold in that big pile there, isn't there, Jim?
Yes, that pile averages at least 0.6 grams per ton. Much of the bottom of it is about 1 gram per ton. The bottom 25 to 30 feet is really good ore. The top of the pile is much lower, probably 0.2 grams to 0.3. But with the Arizona Department of Environmental Quality, if we pick it up, we have to remove it. So we kind of have to take the 0.3 with the 0.8 and 0.9. So our average is going to be 0.6 to 0.7 grams per ton. We have drilled out close to 1 million to 1.2 million tons of the Tom Reed tells. We went reverse circulation for 60 feet through that entire pile. Very consistent grades throughout the whole pile. There is an additional 1 million tons that we have not drilled to date, but the 1 million tons would give us close to a 5-year mine life. And so as we get into this project, we'll get a couple drill rigs out there and make sure the back of that pile is the same.
Stein, worth mentioning that we do have the only fully permitted integrated gold mill in the whole of the state of Arizona, and Jim and the team are in control of that. So, Jim, is it fair to say you're getting a lot of interest from locals wanting to sell ore to you? And, they're obviously very keen. They've heard the words out that you're reopening.
That is correct. Almost every day, I have one or two people with different mining operations around us in Chloride and the Pioneer and over on 68, the Philadelphia. They would all like toll milling agreements. That this is kind of where we are right now. Is if we can fill the mill and we can get our underground up to speed, we need to put our ore in first. But it is worth talking to them. And if there is a deal that could be made where we could make more money running their ore, that's another possibility. So.
All right, perfect, gentlemen. Next question we have, or our first statement from Jose. Looking forward to the progress. Well, thank you for swinging by. Definitely excited for that as well. Next question again from Ariel David. How many tailings are available to be reprocessed, and what grade are they? I believe you already answered this, Jim, but perhaps you can give a quick recap again.
Yes, for a quick recap, the Tom Reed tailings will average 0.6 grams per ton, and that is recovered grade. The United, and there's close to 1 million to 1.2 million that we have drilled and assayed and have high confidence in. On the other side of the town of Boatman is the United Eastern tailings. On that side of town, we have approximately 500,000 tons at probably about 0.4 grams per ton, 0.3 to 0.4 grams per ton. A little lower grade, but at today's gold price, still economical to run. So altogether there's 1.5 to 1.7 million with an additional million ton that we haven't done any work on.
Perfect. All right. Next question from Harry Joe. I think this one will go to Jeremy. Some thoughts about your dividend strategy? Thanks.
Yeah, that's a really amazing question, because a mine like this at today's gold price, and with the ability to blend the tails and the underground and keep costs very low, means that we should generate substantial earnings per share. Now, obviously there's risk to mining. Things can go wrong, delays. We've been through that experience ourselves in the past, but this could be a significant dividend play. We're exploring the idea of paying out physical gold and silver. There was another group in Nevada that used to do that up until 2 years ago. So maybe we give everyone an option whether they take cash or physical gold as a dividend. But with so few shares out, and with a very highly profitable business, we can certainly pay huge yields. And we're not going to get distracted and start buying other things, or we're not going to blow huge money on exploration. We're going to chase a lot of vein, and we're doing a bit like the old timers and keeping costs super tight. And we're paid. We're going to return the favor to our shareholders.
Perfect. Thank you for that answer, Jeremy. Next question we have is also from Ariel David. Is there any unprocessed ore available at surface for operations from the operation in the 1940s? And can this be processed? And what grade would this be? I guess for the Gold Road team.
Black rock.
Yes, there is a heap leach pile at the Black Eagle, just past the Tom Reed Tills. I believe we measured that at 500,000 tons, Raj. And I still need to do more testing on those in the lab, just a few more samples. I've done some samples on those many years ago. It may be just slightly better than the Tom Reed Tills. And so that is a big stockpile there we will be looking at running. And that could be brought forward and ran before the United Eastern. So
Stan just had it right there.
Yeah, there is the Black Eagle heap leach pile.
Yeah, show that, Stein. That's a beautiful picture, Lars. Yeah. I think that Jim's been very conservative on that grade, right? Because that's we picked up a 1/2 ounce rock just in that pile, didn't we, Jim? I remember.
Yes, that's correct. I just don't want to say something that is, because I did run samples and it was good grade, but that was in about 2010, and it would have been good ore then to just keep the mill sustained, but today it's great ore. So you're right.
Great question. Great question. Yeah.
Yeah, very exciting, and that is very close by as well, of course, to the mill. It's right next to your Tom Reed's tailings. Next question we have from Martin Kostuik. I'm not sure how to pronounce your last name. I apologize. As a result of your investment DD, I suppose this question will go to Jeremy. What initial key items will you be tasking your geology team with?
Well, it's a great question. We have a lot of underground, and maybe I'll let Alex explain this, but we have a lot of areas already open, ready for mining. So we don't need to do any drilling immediately before we start mining. So we do want a chase vein. We're not going to spend $3-5 million drilling out, because we actually think chasing vein gives you much more information than drilling from surface. And, you know, as Alex says, he likes to fill the truck with cash and not with waste rock. Maybe, Alex, do you want to just tell the guys what you're thinking underground? Because obviously you and your father work. You've been your family's been with Gold Road for 20, 30 years.
Yeah, we came here in the 90s to start this mine. My father with Red Path, and then when it closed, and then in early 2000s is when I started. He had retired by then. But as for the headings, the last company that was here left us quite a few, about 5-6 headings of ore just sitting there before they left. And the way I would like to mine it is as the old timers did: stay on vein. If it's not making you money, don't bring it outside. So that's why I would like to follow the vein as we decline and explore the mine. It gives you the grade of the ore as you're going. Then you can shrink stope it above you, and you get quality tons.
Correct, without a lot of waste development.
I love that answer. Thank you. Sorry, Jeremy, go ahead.
Raj explain the true vein, because the true vein is, we're not mining the true vein anytime soon, but Raj, you think that might be close to 1 ounce a ton feed, yeah? Maybe.
Yeah, Stan, if you have the picture of the 4 main vein structures, we can kind of go through and explain to everyone.
And give a bit of
Which
background.
picture are you talking about?
The 4 veins, plan view, which shows the 4 veins where the true vein is, gold ore.
The slide, I'll pull that up.
Yeah.
Go ahead, Raj. Explain a bit about true vein. That's a super high grade.
So true vein was the initial start in Oakman. So true vein is right below Oakman town. And so when in 1890, when they started mining here, that's what the mine was right next to Route 66. So the last time they mined there was 1940, which Jim was mentioning before. With the Mine Act happened, most of the miners was pulled in to start mining lead, which I believe the lead mine is Colruyt mine, which is near Kingman, for World War II. And so they abandoned the mining and no one touched it. So it's a historic area. And back then, again, it was not over 1 ounce. They wouldn't touch it. And so back then they high graded that true vein zone. Yep, there you go. You see the picture there. So you got a bunch of shafts in mine right there, and you got United Western in the western section of the mine, all the way to Kelleride, which is to the right side, which is east. So true vein means TR means Tom Reed, and UE is United Eastern. So that's the acronym for why it's called true vein. And there's a section there. There's 2 sections. You can see there's one called Gap, GAP, and there's another one called Lost Segment. So Ben Harris and Big Jim, both of those sections of the mine were controlled by 2 different companies. And so they're fighting over who controlled that lost segment section. And they never came to an agreement until they stopped mining. And then right now, one family took over the whole district, which we are right now in partnership with them. So that is a whole new zone no one touched there. You can see there on the picture, it potentially contains 500,000 tons at 0.7 ounce per ton. And I believe gram would be somewhere like, Jim, what, 26?
26, 27 grams.
Grams per ton. So that's one of the biggest target we're looking for exploration. And that's what Jim was saying. It's a complete separate mine from Gold Road. It's a whole new mine. And then the second section we did some drilling on, which was this between United Western and United Eastern, and we call it the gap zone. And so we did about 31 holes between that, and we found, see that color there, coloration on that little bottom of the slide, the dark green. I don't know if you have an arrow there, Stan, you can kind of point out the zone there. Yeah, right there. So that's the model we did. That was the last time we drilled there, was 2021. And the red is where the mineralization is, red and yellow. And we estimate in that area, first pass, again, we have to do more drilling, to contain, give or take, about 60,000 ounces, which is at 0.25 ounce per ton. And Jim, that should be what, 16 grams per ounce?
Yes, 15 to 16
grams.
grams.
So those are the most critical true vein. That's why Jeremy was pointing out for true vein, there's two sections. There's no mining or area where we have existing already mines, which can actually have two different separate mines in the true vein.
Yeah, it's a great summary, Raj. And I mean, obviously, we're not going to rush in and drill that just yet because we've got the Gold Road mine a mile up the road, and that's where the cash flow comes. But the potential for an ounce a ton feed is, wow, that would be exciting times, wouldn't it? That'd be then you're going to market cap. Go ahead, Stein.
All right, thanks, gentlemen. Really appreciate that. Next question, again from Ariel David. Where does the mine get its water from? Is there a water source for the sale plant processing ore? And does the mine have a license to use the water from the regulator in Arizona?
Yes, at this point right now, we've been storing water, and we have 5 levels down at the 3310 down to the 3080. And that we have approximately 15 million gallons stored. The mine itself makes 30 gallons per minute. And we also have the Ben Harrison shaft that is right next to the Tom Reed tailings that 5 years ago was supplying the town of Oatman their water. And they have since started using water from the Big Jim. So I have a deal with Steve Anderson to be able to use his water from the Ben Harrison shaft that comes straight to my pond for processing. But for the next 1.5 to 2 years, I won't even need any water from Oatman at all. And we do have a pipeline already from Oatman to Gold Road, so we won't have any water issues.
Perfect. Thank you. Next question. Do you have a rough estimate on how much it will cost to process the tailings per ton and how much gold is in the tailings you're looking to use exactly?
Okay, so the Tom Reed tells are 0.6 grams per ton, and at $3,300 gold, you're at about $100 per ton. Our milling costs are close to $35 per ton, and then transportation costs, you're going to be at around $45 to $50 per ton all in. So that's where the numbers lie on that.
Perfect. And next question from Harry Joe. Production targets for the coming years, gold silver ratio 1:1? Question mark.
Production
the gold to silver ratio for the Gold Road mine is about 60% gold to 40% silver. In the tailings themselves, it's going to be about 70% gold or 70% silver to 30% gold. So there's much more silver in the tailings also.
Why is that, Jim? I was going to ask you that. Why has it got more silver in the tails?
So in a CIL system or a CIP, carbon and pulp system, and this is clear back in the 1920s and 30s, your value is in your gold. So when you're loading up carbon to be stripped, you always push the silver downstream so that you get a higher quality gold. And silver is good, but it's not a silver mine, it's a gold mine. So we would rather pour more gold than silver. You don't necessarily get much better than about 50% recovery on your silver, because you have to load your gold high enough, and that pushes the silver downstream.
Perfect. Thanks for everyone watching. Please keep the questions coming. We'll try to chirp through them as we go. Really appreciate the engaging conversation. Next question: what are the extra costs per ton caused by using smaller trucks? I believe this is a question on something you guys referenced in the past. And how is that impacting profitability?
Was that trucking costs? I'm sorry, it broke up a little bit there.
Oh, yeah, apologies. Yeah. What is the extra cost per ton caused by using smaller trucks was the main question, and how that influences profitability.
Yes. So running a 15 or 20 ton truck, you're taking 40 loads a day, to where if you could use off-road trucks that could haul 100 tons per load, it's much cheaper. It would probably cut our costs in half. And that's the idea of getting the haulage road put in, is it could literally cut our transportation costs at least in half.
Yeah, I was going to add on something. It's like anything in mining, it's logistics of how quickly can you move the tonnage out of the tailings to the mine site. So we're looking at, give or take, about 16,000 feet transportation one way. And so having a bigger truck, it definitely gives you an advantage strategy-wise, because you can have an extra stockpile of materials, so that if something happens, your mill will never stop to keep producing. And so that's the reason why we were trying to get a whole new road. But with the delayed permitting, that'd be still the strategy going forward with the tailings, is to still create a road so we can put a bigger truck to de-risk the production at the mill capacity of the mill. And so initial startup, we estimate we can handle with the current production profile, looking at 600 tons max per day at the mill. And so then also opens up other strategy on upgrading the mill to increase our capacity for the mill for production. So a bigger truck, bigger mill, you start having more production profile. And I believe one of the gentlemen was asking, what is our current production per ounce per month we are targeting? So we are looking at, this is again, just contingency. We can do more, but we don't want to say that. We just will fix our recovery rate. So right now we're targeting about 17,000 tons per month at the mill at a 0.023 ounce. We're looking at, give or take, between 250 to 300 ounces per month production, just tailings. And then
I think you're a little low there. I think we're at 350 just tailings, but we're planning on having 20% mine ore in that. So
then that's the upside from the underground production. And so that's our initial startup, because when you start something, you have to still iron out the details, right? You're going to have up and down. And so the first 3 months, and Jim would say that, because the mill has not run for 4 years. So we have to fix some of the items, and Kelly can even talk about that too. Your recovery rate, your tailings, your chemicals, and so forth, right? Load up the mill. And so it will take you, 3 months to kind of get to a peak.
Smooth things out.
It's definitely going to take a little time. We got to reseal the mills. The seals, the oil seals have dried out, and we replaced a couple of them with rubber hose last time, and it worked, sort of.
Yeah.
It wasn't a genuine fix, but it did keep us running and keep us going till the end.
So that was the reason why I said in the initial first 2 months or 3 months, we will not have a huge production, just to get everything sorted out. And then, like Jim said, once everything is optimized, then you have something like 300, 350. But initially, the first month or so, when we do get the ball rolling,
it's going to be a slow progression, but really we'll be smoothed out within 2 months.
And hopefully that answers the question, sir.
Yeah.
Great.
When do you
Thank you.
stockpiling, Jim, or the tailing stockpile? When do you think you'll start stockpiling on the ROM pad?
I talked to him this morning, and we're hoping to start moving tailings mid-July to the 1st of August. And I would like to have close to a month stockpile here, so that we don't have any interruptions in feed and just try to maintain that a couple weeks to a month ahead. That way the mill never shuts down.
And Alex, when do you think you might start mining underground?
I believe they were speaking about September, not too long after the mill is already fired up.
We're looking at starting sooner as well. If with the new direction from the board of directors in Jeremy, so we're thinking about starting even the underground in August too.
Yeah, we're
Soon
moving.
as we can get people here. That's
Stein, any other questions, mate?
100%. Very exciting, gentlemen. And we're jumping the queue a tiny bit here, but it's a great add-on question by Girish. An add-on question regarding the logistics. Can a conveyor system reduce transportation costs for long term? I believe he's referring here between the tailings towards the sill plant.
That is very true, and I have been looking into that heavily. I have some really good bids on conveyor systems. They kind of came in higher than we liked, and he called me again yesterday and is offering me a better deal. So a conveyor system is definitely another option we are exploring right now. I'm not going to be able to get a conveyor system in and built and ready. It will take 3 to 6 months just to get the layout and get the path put through, but that is another option we are exploring. Between the Tom Reed Tills and the Gold Road mine, we do have power in a couple places, and to run a conveyor system for that 2.5 miles, we have a lot of engineering and design work as to where you'd put your motors for power distribution and things like that. So.
And just to add on, Jim, and that's a good question, is that we looked at the OPEX for the conveyor versus the trucking, and definitely is 50% of the haulage OPEX, compared to using a conveyor. And so that's definitely, it's a very smart and better idea to do a conveyor system cost-wise for OPEX. But what we are kind of outlining right now, as Jim was saying, with contractors, is looking at the capex. What is the capex needed to construct and put all those systems together? So that's where we are right now. But that is something we definitely want to go for the life of mine of the Tailings project, is put a conveyor system, and definitely will decrease your OPEX cost for haulage.
It'll just be more capex on the front end. So we're trying to work that out now.
Perfect. Thanks, gents. Corey Spoler said, very great news, a gem of a project. Thanks for swinging by. Kevin Hawthorne wishes us good morning from Lakeland, Florida. So good morning right back to you. Next question. Exactly. Next question we have is from LB. Can the team take us through the use of proceeds? What's the contingency cash in the event first gold pour is delayed?
Jim, you want to run through the mill capex items, key items for the mill, and obviously with the mine?
Yes, the key items to put the mill back into production would be the rod mill liners at about $200,000. Rebuilding the cone crusher. We have to go through all the gearboxes, change out oil, work on the filter press, and then we are planning for a new filter press for the dry stack system. So we're looking at about $1.2 million to $1.4 million, and we will be operating.
That's a very low capex, guys. Anyone listening? I mean, that's a very, very low restart capex. And maybe Raj and Alex, you're debating whether you bring in a contractor or we mine ourselves, because we do have our own fleet. But what's the cost per month of running a mining team, you think, to produce? It's quite a low startup cost as well, isn't it?
Yeah, right now that Jeremy is mentioning, we had some conversation with contractors right now, but for the placeholder right now, until we get the finalized cost, we are looking at about roughly, give or take, $800 per foot advancement with a contractor, and that can be even lower. So that is our approach at the moment, just as a placeholder. And we do have a conversation this week, Jeremy, that's on Thursday, with one of the contractors on just outlining what would be the all-in sustaining cost for operational. But for the time being, that's our placeholder for costing. And we estimated on our production, let me just look at my information here. So our target was have an initial small start, give or take, at, let me just bring my operational here. So we were looking at a very small start at about 100 tons to 120 tons per day from underground, and then slowly ramp up. And our heading size is going to be, like as Alex was saying, we're going to go old school and try to decrease our dilution factor. Our vein thickness is about, give or take, 5 to 6 feet thick. And then so we're going to mine 7 feet wide at 10 feet high. And we're going to be using, I believe, start off with jacklegging, right? And so the advancement we're looking at is forward, every round you take is 8 feet advancement. And that volume with our density factor of 0.072, it's about 30 tons per round. So one round, meaning one advancement blasting, is 30 tons, 30 to 35 tons based on overbreak. And so that is, we need to have 3 working phases to maintain that production profile. And so that's what we right now, what Alex was saying, we have 6 working phases right now available to go. And that's the vein slide right there, slide is showing you. And so that's what we're going to be chasing. It's about 3 rounds per day advancement to maintain the underground 80-20 ratio of 20% underground and 80% tailings material to make sure our grade is higher than what to just for production and cost wise, right? So that is our initial startup point. And so we're right now in talks with a contractor. The advantage of a contractor is that you're paying for experienced miners, right? And so that way you will maintain the production profile and less dilution. And right now with such a close start in 3 months, we're supposed to go into production, hiring people in-house would be a struggle. So I think the strategy for us is to get a contractor to get the ball rolling, and then we can revisit and see if in-house with Alex with training and everything would be ideal in 2 or 3 years from here, so we can decrease even the production cost lower. For initial startup, that's why we're looking at contractor instead of in-house.
And also equipment and capex.
Yeah, and so that way the other thing too, right? So logistics, when you buy new equipment, vendor, training the drivers and so forth, that becomes a 6-month minimum process if you do it in-house. But a contractor bypasses, so you got time and money. So you do pay a little bit more, but you get the production sooner. Otherwise, we have to delay the startup just to get all that items in place. So that's why the strategy is to get a contractor instead of going in-house. Hopefully that answers the question.
I think so, gentlemen. Thanks for that great overview there. Perhaps the next question I think will be for you, Jeremy. Question is from LB. How much are directors and management funding Gold Road? And perhaps also in addition, you can talk about the cap table real quick and how the funding is currently looking like.
Yeah, so the management currently own about 40% of the stock, and we're doing the seed round was a valuation of only 3 million Canadian. So we're going to end up with we currently have 10 million shares out, and if we take a little bit more money, we'll grow that to 12 million, maybe 14 million shares, all at 50 cents. So you're going to look at a post-money valuation of only maximum 7 million Canadian for a business that would be, as I said, $100 million to build today. So we're giving a lot of upside to our shareholders. We just feel the timing's absolutely perfect to start a beautiful gold mine like this with talented staff that we have. The team are all excited, and you can see there in the videos the quality of the equipment. The capex is extremely small to restart. The payback's less than 1 or 2 months on the capex, and I really believe longer term you're going to slowly grow the production from 20,000 to 40 to 50,000 ounces a year as we go in and do more mining and less reliance on the tailings. So very tight structure. It's probably, I think, as I said before, might be our best acquisition we've made. We've got 4 companies. Liver Gold, we had a fantastic announcement the other day on Liver Gold, where that's listing with the Metals Group. We just funded $100 million with Tucano in northern Brazil. with our partners in the private equity group in Sao Paulo, and Pilar, we're resuming production as we speak now. So, but this one is definitely the tighter share structure, the best timing on acquisition, and just so excited about the potential here now.
And Jeremy, perhaps also quickly touching base on how, if anyone's watching and is interested to potentially participate, how they can reach out and do so.
Yeah, go on to goldroadusa.com, goldroadusa.com, and ask for Ed, Balm, or Max, and we'll just leave us your name and or your number and email, and we'll happily we'll call you, and by all means just give us a shout. We'd love to hear from you. We do have over 800 supporters of our 4 companies, sophisticated mum and dad shareholders who've backed all of our transactions. And Gold Road, the response has been absolutely amazing, and I think it's probably because it's in America, the greatest jurisdiction in the world. Arizona's an unbelievable place to do mining with wonderful, talented staff that we can source from. And there's just been a phenomenal response from people who've reached out to us and want to back us, and back Jim, Kelly, Alex, Raj, the whole team there, to make this a really great success in the Oatman district.
Great. Thank you, Jeremy. We have quite a few questions still left that we want to go through. So perhaps we'll have to go long a couple of minutes, gentlemen. Hopefully that's fine with you. Question from Girish. Are all mining licenses in place and valid for the coming future? Is there any tariff impact? And are there any more approvals needed?
We are a fully permitted mine. I've notified MSHA. We have all of our training plans in place, our mining plan. When the contractor gets here, we'll set that out to MSHA. But no, we have an APP permit that is a lifetime permit for this mine. Our air quality permit, I'll have to start working on a renewal about October of 2026. So that permit is in place for the next 2.5 to 3 years. And then all it is a renewal. Every 5 years you have to go through a renewal, and it takes you about a year to do. Other than that, all of our permits are ready.
And then he's talking about supply chain and tariffs.
Supply chain and tariffs. With the filter press, he was saying, there may be a tariff on some of the steel on that. The price may go up a little bit, but he said it wouldn't be on the whole filter press. It would only be on a couple beams. So there shouldn't be a huge impact there. As far as parts and things, a little bit of an increase in price right now, but nothing more than about 5%. So from what I've seen so far.
Yeah, great. Thank you so much for that color. I'll be combining a couple of questions in one. We've talked about the mining method already, that you're trying to go a bit more about it like the old timers. But we have a question from Ariel David, what the mining method for the underground miners look like. Is it stope mining, or are you using any special techniques for mining? And are there any concerns with previously mined stopes? As well as we have some confusion about gold and silver. So confirmation, you will be mining and processing both gold and silver. Is that correct?
That is correct. On the Tom Reed tills, it'll be 70% silver to 30% gold. So there'll be a lot more silver in the tailings. For the mine ore at Gold Road, it is 60% gold, 30% silver. So it's a 60-30. We do pour doré bars, and they're shipped to a refinery, and we will be producing both gold and silver.
Do you want to let Alex answer the mining question, please?
Yes.
The mining method is a shrink stope. That is about 95% of the mine has been shrunk stope that way. It is the most efficient way to mine this vein structure. They've tried bulk mining in the past, and your dilution factor increases a lot. So in order to get quality tons out, you have to shrink stope it so you can have control of the vein. If it shifts, if it widens, if it shrinks, that way you'll only mine the vein.
It's very similar to Stillwater mine in Montana, which is vein structure as well. So you can see that our native ground doesn't have any nugget effect, and most of the ore and gold is in the vein structure, which is the silica oxide, which is coarse. And so that's what the issue happens. If you do bulk mining with the traditional stoping, long hole stoping, you need definitely go 90% to decrease your overbreak factor. And here the vein kind of twisted, not radically, but it's 80% to 70% twist up like this in order for us to control the overbreak of not diluting the native ground with the ore. You have to pretty much section. So the strategy is you drive a drift, right? Then what you do is you then go raise right next to it, stoping, which is, and you climb it all the way down, and then you mine each level section by section, which is very similar to how they do it at Stillwater. And then you control your dilution factor, and you get, just like what Alex said, the ore, and not mining waste material, which is not making you any money. So that's the strategy of mining. It's not your typical drift and fill, because we're not going to be filling. The RMR, the rock mass ratio, is pretty strong here. Some of the headings have been open for 100 years, and they hardly haven't been any ground. So our RMR here is like 70 to 80%. And so there's no infill. We can fill that void eventually with the waste material, but that's what the strategy is, to go typical, they call it conventional stoping.
Yep.
Perfect. Thank you, guys.
While we're doing the scoping as well, we'll also pull a little bit out as we're doing it, but as that stope is finished is when we'll empty it.
Perfect. Thank you, gentlemen, for the color there. Next question up: are there any royalties on the mine from the ore by any owners of mineral rights or from a royalty company?
Yes, Mojave Desert has a 2% historical royalty on the mill, and as part of the transaction for the seller, they're receiving a 1.5% royalty with a cap of $3.1 million of payments. So we can buy that back over the next 2 years. So longer term, 2% royalty, and we probably might consider buying that also back if that's available to be bought. So yeah, at the moment, we don't have a silver stream on there, but we're debt free effectively, no financial debt, and but that's the royalty.
Great. Zooming in a bit more on that, we have another question. Has Gold Road Inc. have any debt on the balance sheet, or what is the schedule to pay it off? Perhaps you can, you already started hinting at it.
Yeah, there's no creditors on the balance sheet. As part of the transaction, we're paying 5 cents in the dollar, and we're paying, there's another 3 payments left over the next 9 months that we intend to pay from cash flow that total $4 million to the vendor or to the seller. So we're very confident of matching those with gold sales. We know the seller very well. They've done 2 transactions with them before, and the way we can structure this deal, it allows us to pay through production and have a very tight share structure.
Perfect. We're approaching the end of the backlog of questions, so hopefully everyone's all right with running just 5 minutes long. And we have another question from Harry Joe. Will you buy the surrounding tenements?
Raj, maybe you can answer that. We're just about to buy them, aren't we, next year?
The other zones, the other claims we have.
Oh, yes. So the strategy is we got, like, I don't know, Stan, you got that picture again for the vein structure, and then kind of see what the strategy is. So how can we, there's another one there. Go up the whole vein structure. I don't know, this slide.
But we have about 5 claims.
No, not this one. Keep going, see, keep going. And if you have that picture or not, that way we can talk the strategy.
No, I don't think it's in this one.
Probably not in this one. Keep going, keep going. That's it, right? That's the end?
Yeah.
There's no more pictures? Okay.
No, there's a couple one down, but...
Now go up to 2 of them, sorry, I apologize. Go back to the one you had before. Yeah, this one, yeah. We talked about this. So you can see this is our district, and there's a better picture team, so I apologize about it. We probably next time put it. So you got 3 vein structures cutting through the mine. So you see the light pinkish color, that's Gold Road. I don't know, Stein, you can have a little arrow there, you can kind of point out. Yep, yes. Go down, that's gold ore go down a little bit, and then below that, that's Gold Road. And right in the blue, dark blue, and all that green is the true vein all the way to the top. And there's another section called Kokomo. So the strategy is get the ball rolling, start producing tailings material and gold in the first year or two. And while we have cash flow coming, the strategy would be to then put money in the ground for drilling out the lost segment and the gap zone, because those are the most mature and high grade materials. And then strategize on bringing them into production within 2 or 3 years. Start getting the capex completed and how much we need to start producing. So the strategy would be, once we start slowly bringing up all the 4 vein structures incrementally every, like after 2 years, 3 years, 4 years. And what me and Jim was strategizing is that once we start having all these other veins in maturity and production, we can quickly also throw the strategy of upgrading our mill capacity. Right now, the mill is capped out at 600. And if we start getting resource from 4 other main vein structures, we can strategize on potentially bringing our production profile, I'm talking about peak at blue sky level, to be 2,000 tons per day. I mean, that'd be the strategy in the 5-6 years, right? So definitely the initial start is just phase 1. Get the mill running, get the tailings running, get some production from underground to get some cash flow. And then as we start building cash flow, slowly start strategizing on
to the other
areas in phase 2, phase 3, phase 4 to optimize and then also upgrade our mill capacity too. So that'd be like the phase section. So hopefully that answers the question, but that's the big picture pie in the sky strategy to eventually have full production from ideally from 8 zones. So right now we're just looking at 1 zone within Gold Road, which is eastern section. So each of the vein will have 2 zones, east and west. And if we just say minimum production, each one producing 200 tons each, you can fully capsize and start looking at ways to even upgrade the mill for production wise to optimize your cash flow. So that's the phase in the future, but for right now, that's the phase 1 right now we're focusing on. But that was gonna be like planned year 4, 5, 6, so forth.
And I think
it's that, Jeremy.
Fair to say, Raj, we've pegged pretty much the whole district, haven't we? That been thanks to all the hard work you guys have done. We control most of the Oatman belt, don't we?
Yes. And the final payments will be in the next year on about 5 of the land claims, I believe. So
yeah, about 1.8 million, and then we that will complete the whole transaction. And yeah, I think the Oatman's been overlooked, hasn't it, Jim? It's been overlooked as everyone raced off to the big mines in Nevada, and we have the jewel in the crown, I think, don't we?
That is true. This area, especially the true vein, the Tom Reed United Eastern, no one's done anything there since 1938, 1940. And it was excellent ore down there. So it could be a very good district.
This is Gold Road is the largest gold producing mine in Arizona, and the district we hold is the largest gold producing district in all of Arizona.
Wow.
That's a little fact that people overmiss.
That I never knew that, mate. That's an amazing statistic, isn't it? What a huge potential we have here, Stein, isn't it? Incredible.
100%, gentlemen. Thank you so much for that overview. We just have a couple of more questions I would love to squeeze in, if that's okay with you guys.
Okay, yeah, sure, go for it. Yeah.
All right. Christopher Atkinson, what are the conditions like underground? Is there significant rehab required to reassess the working phases that you have mentioned? And also a quick question from Will Simons. Has a contractor been selected already?
I'll let Alex.
The ground conditions, as Ross said, are very, very good. There's no acids, gases, or anything in this mine. So the split sets and Swellex wire, it doesn't rust, it doesn't corrode. The old headings that we go into, like Raj said, over 100 years old, there's no ground falls. The ground doesn't move here, no rock bursts. Yeah, it's a very, very safe mine to work at.
And we've kept it dewatered over the past 4 years, 3.5 years. So they're all accessible right now, which is a huge benefit.
And then contractor.
Contractor right now, still in talks. Jeremy, we have a meeting this week, I believe, right? Setting it up. And so we have not picked that contractor yet, but we're in the process. And plan is to have someone picked by hopefully end of this month.
Yeah.
All right.
We're moving fast. And great question, Chris. Great question.
Yeah, just a handful left. Another question from Girish. For the product yield of 0.6 grams a ton, I think they're talking about the Tom Reed's tailings there. Is that 100% gold? That's 0.6 grams a ton? Or is that 60% kind of like a 0.4 gram gold, 20?
No.
Well,
Okay, I understand what he's asking. It is 0.6 grams gold, and there is also an additional 0.9 to 1 gram silver. So that is just gold, not the equal. So
That's recovered gold as well, Jim, isn't it? It's from the mill.
correct. That is recovered gold. And yeah, also we will have 1 gram silver on top of that.
yeah, so truly a side credit not included in the gold statistics. Great. Then we have a last question here laid up. What are the top 3 largest risks to mine startup? At what gold prices will you start worrying about shutting down operations?
In my view, the tailings make money. You don't lose any money on tailings down to about $2,200 gold. Now, if we can get the mill up and running with running tailings, that covers all of our costs. Underground, I mean, the sky's the limit there. If we can get the mine up to 300, 400, 500 tons to where you're taking over the mill capacity with underground, we've got it made. There really isn't a price below $1,200 or $1,400 gold that would shut us down at that point.
Great answer, Jim. You sum it up so well, mate. Yeah.
You do. Excellent, gentlemen. Thank you so much for your time and your knowledge here. Jeremy, perhaps you can remind the viewers at home quickly how to get in touch if they want to find out more information and potentially participate.
Yeah, absolutely. And thank you for joining today. Go into www.goldroadusa.com. Ask for Ed or Max or myself, and we'll happily give you a call. We're going to keep this seed round open for another week, and we think it's going to be a phenomenal investment. Look, there are risks. Everything's risky in mining. Delays do happen. But, wow, we're super excited about Gold Road. We think it might be just our best one we've ever done.
100%. Well, gentlemen, thank you so much again for your time. Also for everyone watching this live stream, really appreciate you joining. And then this is the end. Goodbye. Thank you so much.
Thanks, guys.
Thank you.